Breaking news. Tesla earnings just came out and they disappoint. So earnings coming in bad, that's not good for the stock market, but that might be good news for the bond market because usually when the stocks do bad, people move money out of stocks into bonds. How does that help these over through here? Well, that's what we're going to talk about in today's video, folks. So my name is Dan Frio. I come out each day to explain to you guys what's going on with those and the whys behind it. So what we're going to talk about today is earnings. Earnings are what's driving everything right now, and that everybody's been telling us that. So we're taking a deep dive into the earnings season. So far, been pretty good. Last night, Netflix, they disappointed, and so far today, after the bell, looks like Tesla disappointed as well. So breaking news right through here, Tesla's earnings are out, and they don't look too good. That's taking down the stock market, but that might not be bad news for bonds. If we go over to the equity markets or the bond market over through here, here's what we're seeing in the markets right now. We have the MBSs, which are basically flat as a pancake. That's good news. At least mortgage rates aren't going up or down. So the markets are flat right now. We did have some good news on the economic calendar. Let's get over to that here in 1 second. Right through here, the 20-year bond auction traded at 4.5. Last time it took to get rid of all this debt on the 20-year auction, it took a rate of 4.6. That means it's taken less interest rates or to get rid of a lot of government bonds. So if we see these rates come down, we're also going to see mortgage rates follow accordingly. So the bad news that we have coming out potentially is coming out on Friday. We're going to get the CPI number, the consumer inflation numbers. Now, all the economists right now have been flying in the dark, and so on Friday we're going to get some news on the consumer inflation. Don't know how that's going to come in. That's why I've been advising people. If you own a house right now, one of the things I would prep you to do, go over to our website, use the RateWatch tool that we just created. It's right through there. It's RateWatch 2.0. What it allows you to do is plug in your mortgage information and then let me know what rate you'd be interested in refinancing. And when it hits there, I'll reach out and we'll go over the numbers. But right now, here's what it's looking like. We have mortgage rates. They're stable. I think they're going to be stable into tomorrow because I think it's going to be a shaky market as the earnings season progresses tomorrow. We have a lot of data coming in. But if earnings start missing, it's not going to be good news for equities because equities are already a little overpriced in my opinion. So you're just trying to find some data for a pullback. But again, as the money comes out of here, where is it going? It's going into treasuries like we went over in yesterday's Stock Talk Tuesday. Check out that video. But a lot of it's going to go over into the bond market as well. So it's going to cause the bond markets to most likely push up in prices, bringing down the rates. Not much. Join us tomorrow. We're going to go over the most asked question that I get is, when are rates going to go back to 4%? Well, I'm hopefully going to surprise you tomorrow because at 2 o'clock, we're going to have a live event talking just about that. If you want to check out that and more information about me and my team, check out the rateupdate.com. Folks, my slogan here is one application, one credit pool. We're going to compare your loan to over 30 different lenders. How do we do that? Well, I'm licensed in all 50 states as well as Puerto Rico, and we're set up with over 30 different lenders. Want to learn a little bit more about this? Check out our live events. I just had one earlier today. You can check that out right through there. But again, if you're a homeowner, check out the RateWatch tool. If you're a home buyer, make sure you check out tools like this, a down payment assistance loan that'll give you up to $7,000, no strings attached. You don't have to pay it back. There's no payments. And when you go to refinance, makes it much, much more easier. So please check out our website. If you want to put in your application or reach out to us, you can do just that. Up through here is our phone number. You can ask me a question here or just put in a request right through here and choose your day and time. We'll make sure we're there to join you to answer any questions that you do have, especially in regards to what the heck's going to go on with these and the whys behind it. So thanks for watching today. Hopefully you join me this afternoon on our live event, but please come back tomorrow. Subscribe down there so you don't miss one of my videos because tomorrow we're going to give you some breaking news that's coming out. Then on Friday's going to be a big number, the consumer inflation number. How's it going to come in? You're going to have to join us to find that out. Take care, folks. Thanks for watching. God bless and have a fantastic evening. I'll see you back here tomorrow at the opening bell. See you then. Bye-bye.